As an accounting professional, I often get asked what key financial documents a business owner should have. These financial documents will help you to pass out a tax audit, get an investment or a loan faster, and be clear and concise about your finances so that you can grow faster and track your expenses wiser. Before starting out, here is a small announcement. I am on a mission to connect with 1000 small business owners and entrepreneurs to make finances more accessible and less daunting. If you want to support me in this mission, feel free to subscribe and stay with the channel. So, the first financial document every business owner should have is an income statement, aka profit and loss statement. If you are running a business, your main goal is to be profitable, because being a profitable business you could sustain a long term, but how you can check your business is profitable? So in here income statement comes into the play. Let's see a income statement template so that we will get a clear understanding what this document looks like and what we can get from these documents. So here is a sample template of a profit and loss statement. Let's see what components it has. So generally a profit and loss statement has two sections. One is income and another one is expense. In your P&L statement, all of the incomes your business is generating will be added into the income section, and the total will be in here, and all the expenses your business is occurring will be on the expense side. We can see here is two sections. One is income and expense. In income sections, here is sales, service and other income sections, and total, and expense is advertising, asset, bank charges, and all the expenses of your business and sum of all the expenses. Then profit or loss, that means if your income is surpassing your expenses, that means you are running a profitable business. But if your expenses is higher than your income, that means you are burning cash. By this profit and loss statement, you will find out whether your business is in profit or in loss, and knowing that is very crucial. The next financial document your business should have is a cash flow statement. Cash flow statement is a statement where all the money coming into the business and all the money is going out from your business is recorded. A cash flow statement is a crucial document to have if you are looking to get a loan from a lender or looking for a potential investor, because they have a good look in your cash flow to get an understanding how money is flowing into and out from your business. So here is an interesting part, that is, if your business is profitable according to income statement, but if you don't manage your cash flow management well, your business will suffer a lot, because managing cash flow is so much important than being profitable. So let's have a quick look at a cash flow statement template to understand more deeply about what cash flow statement will offer you. This is a cash flow statement template, and here you can see cash flow statement written down on the top of it. The sole purpose of making a cash flow statement is knowing how money is coming and how money is going from your business. So there are three general activities that a business perform to get money and spend money. Your business is operating to generate cash and spend cash. So first of all, operational activities. In here you will get all the revenue you are getting, that means cash receipt from your customers and other operations. It means how much cash you are getting into your business from customers or other operations. And the cash payments, that means all the payment will be subtracted from the receivable amounts, and here you will have a net cash flow from operation activities. Here is another thing I have missed, that is cash at beginning of the year would be in here, because it is a cash flow statement. You will have a starting balance of cash, so you can make a cash flow statement for a month or by quarterly or annually as your preference. So cash at beginning of the year, in here it's yearly. If you are doing it monthly, then cash at beginning of the month, that is it, will be in here. So after operational activities, there are investing activities. So that means how much money your business is investing, or how much money your business is getting from business investments, just like cash received from sale of property and equipments. By selling equipments, properties, collection of principal of loans, how much loans your business have given to others, and cash paid for purchase of property, because it's a purchase of property, it kind of an investment for your business. Making loans to other entities, that means you are giving out loans, that is also an investment. In here it's 41,000, that means you are investing 41,400 US dollars. And number 3 is financing activities, that means how much money you are spending on your business financing. You can get your business finance by issuing a stock or borrowing money from lenders or investors. If you are issuing stock, then you have to pay back to your stockholders, and that's how your financing activities will get out your business money, just like repurchase of stock, repayment of loan, and dividends paid to the shareholders. By adjusting all these activities, you will get the net increase or decrease in cash. In here, in this statement, there is a positive balance of 19,500. That means increase in cash of this amount. And that's it for cash flow statement. I hope you have learned something from it. It's a very important statement if you are trying to get a loan, because your lenders will see how much money you are spending on operation, how much money you are spending on investing activities, and how much money you are spending on your financing. Document number 3 is a balance sheet. As a business owner, you have heard this word balance sheet a lot, because it is one of the most important documents that your business should have. Think of a balance sheet as your business's selfie. It shows your assets, liabilities, and equity at a specific point in time. Lenders and investors love this document because this document shows whether your business is financially healthy or drowning in debt. So here it is, the king of financial statement, the balance sheet. Balance sheet has 3 main components. First one is assets, second one is liabilities, and third one is owner's equity. In a balance sheet's asset section, you will have current assets for your businesses. Current assets like cash, accounts receivable, inventory, prepaid expenses, short-term investments will be in the current asset section. And fixed asset, that means long-term asset, long-term investment, property, plant, equipment, and intangible assets like you have your royalties and your trademarks and other intangible assets of your business. And sum of all the assets will be written down in here. Liability and owner's equity section has current liabilities like accounts payable, short-term loans, income tax payable, accrued salaries and wages, unearned revenue, current portion of long-term debt, and the total current liabilities will be written down here. And secondly, and after current liabilities, there are long-term liabilities that are long-term debt. If you taken a big amount of debt, the liabilities that will take longer than 1 year to pay. And after long-term liabilities, there will be owner's equity section. By owner's equity, that means how much money your business will have to pay to the owners, right? So here is owner's investment. That means how much money owners have invested into the business. That is a liability for the business. And another one is retained earnings, and it is the total liabilities on owner equity. Here is a beautiful thing about the balance sheet is assets and liabilities will be the same. It won't be different because it's the rule implemented by the great Luca Pacioli that asset will be equal to liabilities and owner's equity. Now let me tell you what investors and lenders look at your balance sheet. First of all, they look at your current assets like how much cash you have, how much receivable you have. And in fixed assets, they look at long-term investments, if you have any long-term investments, any long-term debt, if you have an income tax, if you have any deferred income tax for your business, as well as your accounts payable. So this is the balance sheet for you. And if you want to know more about any of the topic of these statements, feel free to ask me in the comment box. I will be there to help you. Now let's pause for a moment and rewind what we have gone through. Number 1, profit and loss statement. Number 2, cash flow statement. And number 3, the king of the king, balance sheet. Now I will talk about the other documents that is outside of financial statement. Number 4 financial document that every business owner should have is tax return. Here is the tax document for your business, and this is a form of 1040 or 1040 SR, and this form is issued by Department of Treasury, Internal Revenue Services. So profit and loss form, business, so it's a business profit and loss form or sole proprietorship, and most of my viewers are watching maybe a sole proprietorship business. So you will have number A, name of proprietor, your name, principal business profession including products and service, business name, okay, business address, and after that accounting method, cash accrual, you have to take it. Gross receipt, you will find it from your income statement. Return and allowances, it is, or you will get it also from your income statement. So you have seen how a tax form looks like. And another thing that you should keep in mind, that is, always keep all the tax filings organized. This will not only satisfy your tax man, but also keep you away from costly tax fines. The next document is optional, but if you maintain this document, you will get help by a lot. You can underestimate the power of this, but I will bet you will thank me later. So the fifth financial document that every business should have is an aging report. I have made a video about how to manage accounts payable and accounts receivable by using aging reports. You can check it out by visiting onto my channel. But now I will show you how you can use aging report to your benefit, and how can aging report be your savior in some cases. Here you can see an example of aging report. So this is an account receivable aging report, and suppose this is your business's account receivable aging report. Now let's understand what it says. So this is the company names, your receivables from the companies your business will get money from, and this is the sections divided by days, how many days it has been passed, and this company have not been paid the money. Company ABC has a $200 current due, and 1 to 30 days $400 has been due for 1 to 30 days, and company ABC has no other due rather than these two sections, so total is $600. And in terms of XYZ Limited, they have no current dues, but have 1 to 30 days dues for about $500, which is absolutely fine, because having 1 to 30 days dues is absolutely fine, as you know. And XYZ Limited has 31 to 60 days of $100. Okay, this receivable is also good, it has also a good character. But look at UVW Incorporation, and if you see their amounts, you will get shocked what they are doing. They are just bankrupt, I guess. They have no current and 1 to 30 days amounts. All they have is risky days. They have $1,000 that is 31 to 60 days old, and $5,000 of 61 to 90 days, and $2,500 that is over 90 days. So these two amounts are too risky, and these two amounts has a good chance ending up a bad debt. I hope you have understood what aging reports bring to the table, and by properly using aging report, you can determine your risky receivables and take action according to them. Last but not the least, financial document every business owner should have is a budget statement. A budget keeps your spending on track, and financial projection helps you to determine what is coming into the future. Budget and financial projection are your roadmap. They will determine whether you are going to succeed or whether you are going to fail. As we all know, budgeting is all about keeping our expenses in track, and this is where this statement comes in handy. This is where this document helps you. In here, there is two costs, that is a fixed cost and variable cost. In a budget statement, you will have all the fixed cost and the variable cost written down into projected and actual, and the difference of your projection and actual cost. These statement will help you to project for your expenses. This is not appropriate one to look at. Let's see another statement and we will have a clear understanding from that. So that is what I am talking about. This is a income statement, but income statement for projected months. Just like here you see, if your business is starting just in January, February, March, April, May, and other months in here will be your budget. Just like it is been increasing day by day, that means you are budgeting your sales to be grow as 10 to 15 or 20% per month. And also your sales discount will increase on that ratio, as well as your expenses will also increase to your sales, because the sales and expenses are aligned together. If your sales increased, your expenses will also increase. As we have seen in the previous example that there are two type of cost, that is fixed cost and variable cost. So fixed cost will be constant, but the variable cost will change. You are sitting on January, that it is your current month's net income. These are the projected net incomes for your business. This is a budget statement that will help your business by a lot, because by this budgeting statement you will have a clear understanding which expenses will take over and how much money you will need to overcome that expense, or how much money you will need to get the desired outcome. By budgeting you will get all the understanding of your KPIs, and also you will achieve your KPIs too. Which of these documents you struggle with the most? Let me know in the comment box and I will be waiting to see your comments. And if you like this video, feel free to give a like, and if you want to share, you can share it to your friends who are aspiring entrepreneur or struggling with their businesses. Okay, see you in the next video. Bye bye.